No one, not Washington, not Brussels, not even Amsterdam itself, fully anticipated what's now unfolding. Yet here we are. The Netherlands, one of America's closest allies, has just made a bold move that could upend the global semiconductor industry. And it's not backing down. With just one decision, the Dutch have thrown a wrench into America's tech war with China. The consequences could reshape the future of global supply chains, and few are prepared for what comes next. The story centers on ASML, the Dutch tech powerhouse that controls around 90% of the global market for lithography machines, equipment essential for producing advanced semiconductors. Under pressure from the United States, ASML was expected to fully enforce Washington's export restrictions on chip-making equipment to China. But instead, as reported by Reuters, ASML continues shipping deep ultraviolet, DUV, lithography machines, crucial for producing high-end chips, to Chinese firms, defying the spirit, if not the letter, of the U.S. ban. This move challenges U.S. efforts to slow China's technological rise and raises a pivotal question. Is the Netherlands charting an independent path, or playing a dangerous game of economic brinkmanship? Former ASML CEO Peter Wennink once warned that cutting off China entirely would only push Beijing to accelerate its domestic chip-making efforts, and he may have been right. Despite heavy sanctions, China's Semiconductor Manufacturing International Corporation, SMIC, recently produced a 7-nanometer chip, a technological achievement the Wall Street Journal called a wake-up call for the West. This puts ASML in a difficult position. Continuing to export to China could prolong its global dominance, but it may also be fueling the very competition that could one day replace it. In the broader tech war, ASML's most advanced machines, extreme ultraviolet, EUV, lithography systems, each costing over $380 million, are irreplaceable for manufacturing the world's most cutting-edge chips. Without them, China lags years behind the US, Taiwan, and South Korea in chip production. That's why the Biden administration, through the CHIPS Act, has pressured the Dutch government to block all sales of EUV machines to China. But things get more complicated with DUV machines. Though older, DUV systems are still vital for making many kinds of chips, and ASML still dominates that market. The US wants those sales blocked too, but the Netherlands is resisting. The reason is clear: money. In 2023, China accounted for 46% of ASML's total sales, amounting to over $7 billion. Cutting China off would deal a significant blow to ASML's revenue, and could hand its market share to Chinese state-backed alternatives. So does complying with US demands mean risking ASML's future? On the surface, continuing DUV exports may look like a challenge to US authority, but beneath it lies a more fundamental concern: economic survival. Dutch leaders aren't just weighing geopolitical pressures, they're trying to preserve ASML's position as a national and global tech leader. The Dutch government invests heavily in ASML, and allowing US policy to dictate Dutch trade decisions risks turning the Netherlands into an economic hostage. China, meanwhile, isn't standing still. Beijing has hinted at retaliatory measures, including blacklisting ASML if export restrictions tighten. According to Nikkei Asia, China is already stockpiling ASML machines, accelerating the development of domestic lithography alternatives, and investing an additional $143 billion into its semiconductor industry. So the Dutch government faces a dilemma. If it caves to US pressure now, will it even have a viable Chinese market in 5 years? Washington's semiconductor strategy is built on one key assumption: that without ASML, China can't advance. But that assumption is already being tested. According to the Semiconductor Industry Association, China produced 70% more advanced chips in 2023 than the year before, despite the sanctions. If the Netherlands holds its position, it might hasten China's climb up the technological ladder. Meanwhile, US tech giants like Intel, Nvidia, and Qualcomm are watching closely. Blocking sales hasn't killed Chinese demand, it's just shifted supply chains. Bloomberg reports that despite US bans, Chinese companies like Huawei have used subsidiaries and third parties to continue acquiring chips. The more Washington tightens restrictions, the more China pours into self-reliance. Huawei's Mate 60 Pro, with its advanced 7nm processor, shocked the tech world. It wasn't supposed to exist under current bans. Now China is preparing to scale even further. According to Keen Global, Beijing's state-backed chip fund has injected another $45 billion into SMIC and Yangtze Memory Technologies, YMTC. Dutch semiconductor analyst Bert van der Vee argues that the longer ASML sells to China, the faster China's domestic industry will mature. That leaves the Netherlands facing a critical question. Is protecting short-term profits actually enabling the rise of a competitor that could one day make ASML obsolete? And this isn't just a Dutch dilemma. it's a European one. The EU has long struggled with unified trade policies, and the Netherlands' move has only deepened the divide. France and Germany have publicly aligned with Washington's hard stance, putting even more pressure on Amsterdam. As ASML stands at the center of a geopolitical tug-of-war, its decisions, and those of the Dutch government, may shape not only the future of the company, but the balance of power in global technology itself. Many European leaders are growing increasingly frustrated as U.S. companies like Intel and AMD continue to receive exemptions allowing them to do business with Chinese firms. This has led EU policymakers to ask a critical question. If the United States prioritizes its own economic interests, why should Europe follow suit without question? According to the Financial Times, European chipmakers such as ST Microelectronics and Infineon are quietly lobbying against blanket bans, and resistance from the Netherlands could potentially inspire a broader European pushback against Washington's trade agenda. If this sentiment spreads, the issue could escalate beyond ASML and signal a deeper rift within the Western alliance driven by economic self-interest. China currently controls more than 77% of global battery production, but its most significant vulnerability remains high-performance semiconductors, which are essential for electric vehicles. Dutch firm ASML holds exclusive rights to manufacture extreme ultraviolet (EUV) lithography machines, crucial for producing the most advanced automotive chips. While the U.S. has imposed tight export restrictions to block China from accessing this technology, ASML continues to ship deep ultraviolet DUV machines, albeit in reduced quantities. This has allowed Chinese firms like SMIC and Yangtze Memory Technologies to speed up development of domestic alternatives. Bloomberg reports that China's EV sector is now the fastest growing in the world, with domestic sales expected to surpass 10 million units in 2024, putting increasing pressure on competitors such as Tesla, Volkswagen, and General Motors. Should China succeed in bridging the semiconductor gap, it would not only dominate battery production, but potentially control the entire EV supply chain, forcing Western automakers into long-term dependency on Chinese tech. Despite expectations of full compliance from allies, ASML's ongoing shipments and China's aggressive push for technological self-sufficiency suggest growing defiance in global trade networks. According to the U.S. Bureau of Industry and Security, China increased its domestic semiconductor output by 38% in 2023, well beyond projections. SMIC, once reliant on foreign tech, has produced a 7-nanometer chip using DUV tools, a feat previously thought impossible under current restrictions. ASML's decision to maintain sales of older generation equipment has encouraged countries like South Korea and Japan to reassess their own export policies, facing pressure from domestic firms not to lose ground to Chinese alternatives. Nikkei Asia reports South Korea's chip exports to China jumped 41% in early 2024, pointing to a possible global semiconductor realignment. Despite U.S. efforts, China remains ASML's second-largest market, generating over $7 billion in sales in 2023 and accounting for 46% of the company's total revenue, according to Reuters. Eliminating access to this market could leave a financial hole Europe's chip industry is ill-equipped to fill. Analysts at ING Bank warn that full compliance with U.S. demands could shrink ASML's revenue by up to 20% over 2 years, potentially resulting in layoffs and reduced investment. The Dutch government, which considers ASML a national asset, has been hesitant to enforce a full export ban without securing compensatory trade deals. Yet, if China succeeds in building its own lithography technology, ASML risks not just lost revenue, but the erosion of its technological dominance. This raises a deeper question. Is ASML buying time or sealing its long-term obsolescence? This semiconductor conflict is part of a much larger geopolitical and economic standoff involving China, the US, and the EU. In retaliation against Western restrictions, China has imposed export controls on gallium and germanium, critical materials for chip production. Meanwhile, the US is expanding its CHIPS Act with $39 billion in subsidies, and the EU is racing to implement its own $47 billion CHIPS Act. The tit-for-tat dynamic signals that the ASML case is not just a trade dispute, but a key flashpoint in a global economic realignment. If tensions persist, we could see tighter controls on advanced tech, increased nationalization of supply chains, and mounting pressure on Western firms to choose sides in a new economic Cold War. Should ASML continue its limited sales to China, US officials might respond with secondary sanctions on European firms, as seen in previous actions against Huawei suppliers. Simultaneously, China's state-backed semiconductor initiative, known as Big Fund 2, has allocated $45 billion to develop its own lithography systems, with initial models projected by 2026.
If successful, this would undercut Taiwan's TSMC and South Korea's Samsung, both of which currently depend on ASML's machines.
European semiconductor firms such as Infineon and ST Microelectronics are increasingly uneasy about aligning too closely with U.S. trade policy, with executives advocating for greater autonomy in private meetings with EU officials. This signals that the global chip industry may be splitting into two competing blocs, one led by the US and its allies, the other by China. For years, Europe maintained a stance of neutral economic power, but ASML's choices now could mark a pivotal moment of change. Washington expected the Netherlands to fall in line, but resistance from The Hague suggests that European nations may no longer be willing to uncritically follow American directives. At the same time, China is leveraging the ASML issue to expose fractures in the Western alliance, probing how far economic pressure can go before unity begins to falter. If China develops a viable alternative to ASML's lithography tools within the next decade, the result may be more than just a tech breakthrough. It could shift the entire global balance of power. While the Netherlands may have made a pragmatic decision based on short-term trade interests, the long-term consequences could fundamentally reshape economic alliances. If ASML loses its edge to China, history may look back on this moment as the point when the West ceded its dominance in computing technology. But this may not even be the climax of the global semiconductor conflict, because a new, unexpected player is now entering the fray, and it could change everything.